That credit card in your wallet has a hidden setting that can quietly keep you in debt for 20 years and cost you thousands of dollars. And almost nobody realizes it. It's called the minimum payment trap. And once you understand how credit card interest really works, you will never fall for it again. Let's pull back the curtain and learn how. But first, let's be clear. Credit cards are not evil. Used right, they're basically free and can even pay you rewards. The danger is in one specific thing. Interest. Think of interest as rent. You pay for using money that is not yours. The longer you keep it, the more rent you pay. And credit cards charge some of the highest rent around. So how does credit card interest actually work? Every card has an APR. That stands for the annual percentage rate. That's the yearly price you pay for borrowing money from the bank. But here's the sneaky part. They do not charge it once a year. They break that APR into a tiny daily rate and charge you interest every single day. At 24%, APR becomes a tiny fraction of a percent per day. It sounds harmless, but because it compounds daily, you start paying interest on your interest. Now here's the most important thing in this whole video. The grace period. If you pay your full statement balance every month, you will pay zero interest. That's right, zero. That is the secret the savviest people use. They run everything through the card for the points, the protection, and the perks, then pay it off in full and never owe the bank an additional cent. But the moment you carry a balance, even once, that grace period disappears. Now interest switches on and it starts compounding against you every single day. This is where the trap springs. Look at any statement and you will see a tiny minimum payment, often just 1 or 2% of what you owe. It looks like a friendly little number. Pay just this much, the bank says, but that minimum is carefully designed to keep you in debt for as long as possible. Here is why. Almost all of that minimum payment goes straight to interest. Only a tiny sliver actually pays down what you borrowed. So your balance barely moves, and as your balance slowly drops, the minimum drops too. So your payments get smaller and smaller, dragging the payoff out even longer. It's a moving finish line. It feels like you are paying. You send money every month, you do everything right, and yet the balance just sits there, almost frozen. That is the trap working. So, let's dig deeper. Say you owe $5,000 on a card at a typical rate, and you only ever pay the minimum each month. Paying only that minimum, it can take you well over a decade, sometimes close to 20 years, to finally clear it. 2 decades for one balance, and along the way you can pay thousands of dollars in extra interest. On a $5,000 balance, you might hand the bank another $5,000 or more. You essentially buy everything twice, once for yourself and once again for the bank. That dinner, those clothes, that gadget, all paid for 2 times over. Now you can see why banks love the minimum payment. A customer who only pays the minimum is the most profitable customer they have. They're not hoping you pay it off fast. They're quietly hoping you carry a balance for years, paying interest the entire time. The trap is the business model. This is not a conspiracy, it is just math, and it is printed right on your statement. Most people simply never stop to read it. Now you will. And it gets worse in one place. Cash advances. Pulling cash from a credit card usually has a higher rate, a fee, and no grace period at all. That means interest starts the very second you take the money, with no free window. So unless it is a true emergency, avoid credit card cash advances completely. So how do you escape, or never get caught at all? Here is your simple game plan, starting with the golden rule. Rule 1 and the big one. Always pay your full statement balance, not the minimum. If you can do this every month, interest can never touch you. If you're already carrying a balance, do not panic. Step 1. Stop adding new purchases to that card. You cannot fill a hole while you keep digging. Step 2. Pay far more than the minimum. Even a little extra each month goes straight to your actual debt and can cut years off your payoff. Step 3. Target the highest interest card first. Pay minimums on the rest and throw every extra dollar at the card with the worst rate until it is gone. This is often called the avalanche method, because once the worst card falls, you roll that money onto the next one, and the next faster and faster. Step 4. Look into a balance transfer. Some cards offer 0% interest for a set time, giving you a window to crush the debt with no interest piling up. Just watch for transfer fees and the date the 0% offer ends. A balance transfer is a tool to pay it off faster, not an excuse to relax. Step 5. Simply call your card company and ask for a lower rate. It sounds too easy, but if you have paid on time, they will often just say yes. Once you are free, flip the whole game. Treat your credit card exactly like a debit card. Only buy what you already have the money for. Pay the full statement balance every single month, automatically. Now you get the rewards, the protection, and the credit score boost, while the bank gets nothing. Set it up once and it runs itself. Turn on auto pay for the full balance, and you literally cannot fall into the trap again, even if you forget. That is the big secret. The same card that traps one person can quietly enrich another. The only difference is whether you carry a balance or not. So let us recap. Credit card interest is charged daily and compounds against you. But if you pay in full each month, the grace period means you pay nothing. The minimum payment is a trap that can stretch a balance over 20 years. Pay more than the minimum, attack the highest rate first, and consider a 0% transfer. Your credit card is not your enemy. The balance is. Kill the balance, and that little piece of plastic turns from a trap into one of your best money tools. And now we want to hear from you. Have you ever felt stuck only paying the minimum each month? Have you ever broken free from this trap? And what is one card you are going to attack first after watching this? Drop it in the comments below. And if this finally woke you up to how credit card interest really works, do us one small favor. Hit that like button. Subscribe and give us a follow for more simple money lessons. And share this with someone you know who is stuck paying minimums and does not even know it.